Good morning. Welcome to the Rick Helps Real Estate Show. I made it. I had a little something changed on my dashboard here, and a couple of my buttons went away. Now you know what I'm doing when the stream ends. And Pedro says, bring the heat. Pedro, don't ever say bring the heat in Arizona. Never. Never. Because it'll happen. So we're going to talk about some of the headlines that we're seeing in the real estate world right now. First, we're going to talk about the fact that we got 11,600 listings, and here's what's happening. My little 7-day moving average, you can see that blue area, that's new listings coming on board, is expanding ever so greatly, mostly because sales are dropping. So I put a little trend arrow there in yellow that you can see. And our sales are down to about 3,300 homes going under contract on a 7-day basis. And that's considerably lower than where we've been. And there's a difference between the number of homes coming on and the number of homes going under contract of about 1,600. And if you'll recall, we were usually seeing that like 100, 200. Now there's a huge, huge gap, and that's to be expected with everything that we've seen. And here's one of the first headlines right here. Fed attacks inflation with his largest rate hike since 1994. So what happened yesterday? Mortgage rates dropped sharply after the Fed announcement. You can see that they're 6.03. Now, you've probably heard me talk, especially when I'm on Fridays with Pat with Price Mortgage, that sometimes the rates are baked in the cake before the Fed makes its announcement. And in this case, originally, the bond traders were kind of looking that the Fed was going to do a 50 basis point increase. And then the inflation data came out last Friday, and it was really bad. And the bond traders were basically telling the Fed, look, if you don't clamp down and take care of this, we're going to take care of it for you. And so rates started going up, and lo and behold, the Fed came in and did a 75 basis point increase. So then the bond traders were like, okay, good, that's more like it. That's what we want to see. And things settled down. Now, I think if they would have only come in with a 50 basis point increase, I think there would have been a real reaction in the bond market, and interest rates would have, skyrocketed. So I guess the lesson in this is, when you see headlines like the Fed is doing this or going to do this, stay close with your mortgage lender, because it doesn't necessarily mean that when the day that the Fed announces an increase, that mortgage rates go up. Mortgage rates are more tied to mortgage-backed securities and 10-year treasuries than they are what the Fed says they're going to do. Now, the Fed does have an impact, don't get me wrong, but make sure that you understand the difference so that you can, if you're in the middle of a transaction and you want to lock, you need to be on top of this. Stephanie says, I heard Chairman Powell state that there may be another 75 basis points in their July meeting. Yeah, they're still going. 2 weeks ago, we finally got under contract in Tucson, locked for 5.3, and couldn't be more relieved. Good. Yeah, you avoided a big bullet there. There's no doubt that the Fed's going to keep raising rates, and that the bond market is going to react, and rates will go up. Absolutely. Mortgage applications here are the blue line, and they're down from, this is an index, they're down, but if you look historically, they're not really down that bad. But you see headlines that say mortgage applications are down, and they're down a little bit. I think it's 11%, something like that. I saw a number here somewhere, and I can't seem to find it. But how high can mortgage rates go? It says here we're about to find out. It's very interesting. This is from Realtor.com. Now, these are the guys that told us that we would only have interest rates of 3.47 this year. So we got to take it with a grain of salt. Mortgage interest rates hit 6.28 on Tuesday afternoon and then dipped to 6.22 on Wednesday, according to Mortgage News Daily. And it says a week ago, rates hovered around the mid-5 range. Ouch. How high can they go depends on how high the Fed ultimately needs to raise its rates to fight inflation, says Realtor.com chief economist. However, she believes mortgage rates could retreat a little once the smoke from the Fed's announcement clears. We've seen big jumps in rates before. Rates can change quickly. I agree with that, but I don't see a downward trend coming in rates anytime soon. I think what you're going to see now between now and July is I think we're just going to hover here. Now, there'll be some more inflation data come out, and it may make the bond market go a little jiggy. And the inflation numbers are going to be pretty bad this summer because they're going to be compared to last summer, and it's going to jolt people. So I think you're going to see some movements as we get into July and August that might scare the bejesus out of you. Here's a headline: U.S. housing starts permits collapse in May. And there it is right there. These are housing start permits. Comparatively, it's still much higher than it was, but it's going down. Building is slowing, and so makes sense that they're not going to issue a bunch of permits. There's still a lot of new homes in the pipeline coming. The other headline that we see is Compass Redfin to lay off hundreds as the housing market cools. Now, Redfin and Compass operate differently than most most real estate brokerages. Like, I'm an independent contractor, so nobody can lay me off. But Redfin had hourly employees, and so did Compass. Compass was this brokerage that touted itself as being very high tech, yet they didn't own any of the tech, and they've been losing millions of dollars every year, and they went public, and the stock is tanked, and they just have all kinds of financial problems. So as real estate starts to slow down in the number of transactions, they kind of got in a pickle. Now, Redfin, same thing. Redfin has hourly employees. In fact, they pay them so much money to go out and show homes. And with the number of transactions coming down, they don't need as many people on the streets. So that's not really an alarming headline. It's like when you saw all the mortgage people that were being laid off, that's because refinancing quit. And refinancing was about 74% of their total business. So things are about to heat up now. Markets are melting and inventory's going up. A recipe for a perfect storm, says D. Rich. It's going to be interesting to watch, because here's what the most listings we've had in Arizona is 55,000. That happened out in 2007. Are we going to blow past that? Well, we have a long road to go to even get close to that number, and it took about a year and a half last time to get there. And so I'm trying to see where. I don't have that data up in front of me here, but you can't scream, oh, here we go, it's going to get really bad, until we start seeing our inventory get at least above normal, which was 27,000. And right now, we'll be at like maybe 12,000 by the time the weekend comes along. So that's the number to watch. The lowest homes going under contract rallied around 2,700, and we're kind of knocking at that door. We're at 3,300. So that's another one to watch too, because the fewer homes going under contract, the higher the inventory is. So we got to watch and wait and see what happens. And here's what's happening now. This is the average list price per square foot. You can see it's kind of starting to come down. And we can see that the cumulative days on market is starting to come up slightly, 26.6 from 25.58. Sherrod says, I locked my rate at 5.375 very recently. Do you think it would be able to refi with a better rate within a year? I don't know. I think within 3 years you probably will, but I just don't know. It's so hard to guess. And that's not my area of expertise, but here's pending listings. Look, it's going down. Every indicator we have shows that real estate's going down. I mean, we can't stick our head in the sand about that. I'm still not saying crash, but I'm saying that things are really going to slow down. Here's our average list price again per square foot. So why am I not saying crash like the rest of the people? I've got to see the huge scale in numbers that portend, that signal a crash, and I'm not seeing that yet. Because the curious thing is as we shared the other day, 53% of current mortgage holders now have a mortgage below 4%, and they have a lot of equity. So rates, I mean, the values have gone up 50% in 2 years. There's no reason to hand that house back to the bank. Even if that home is worth less than what they paid for it next year, what's the reason for handing that back and making it a foreclosure? Now, if there's these huge job losses and there's some kind of economic credit freeze that causes turmoil in the entire financial system, then yes, then everything will crash. And if you're cheering for a crash, I don't want you to cheer for high unemployment and pain. So we're seeing a spike in listings and several price corrections in our market. Median days on market trending upward. Sales price, yeah, it's definitely changing. And you know what? A lot of us agents are welcoming this too, because now we can actually take you out and show you a home where we couldn't before. Both my properties, smack said at 2.79. You're not going to hand yours back to the bank, are you? You're a classic example of why I don't think inventory is going to spike. I see that refi costs money too. Closing costs are significant, and yeah, you gotta, it's it does cost money to refinance. Somebody's asked me what I mean by a crash. For me, it's got to be over 30%, 35%. That's a crash. General corrections of 5%, 10%. That's in my head. That's just a correction. I've lived through many of them, but I've only seen one crash in my lifetime, and that was in 2008, and that was because the credit markets collapsed. Housing caused the recession because of all the derivatives and the way that these financial notes were written, and they collapsed. Right now, there's too much equity, and too many people are holding a really small note, a low interest rate note. Why would they want to give that house back to the bank? That's why I'm wondering where the listing ceiling is going to hit. We're seeing it going up right now, but even this week it's going up a little bit slower than it did last week. I won't get those numbers till Saturday night, but is there going to be a ceiling? And I've got a video coming out tonight that's showing, well, who's actually listing their homes right now. D-Rit says, suspecting a 20% correction, no one can afford the inflated prices as of late with 7% interest. Our interest rates are beating inflation. Yes, that's hard to tell where the rates are going to go and whether they're going to beat inflation. What made me nervous yesterday was Chairman Powell's comments on real estate directly. He just said that for first-time home buyers and home buyers in general, it's time that they see some adjustments to make it more affordable. So he's signaling that he's going to pull housing down. How far? Well, he doesn't have as much control as everybody thinks he does. So if he's trying to get us to like a soft landing to where inflation rate gets at 2%, and he's trying to do this gently, and he may not be able to do it. You're going to have a real clampdown in economic activity in order for that inflation rate to get to a reasonable level. And it all starts with fuel. He has no control over the price of oil, and the people that do aren't paying attention. Since fewer buyers, do you think rents will climb higher? I don't know, because especially if you look at the city of Gilbert right now, and you drive around, you can see it in kind of downtown Phoenix too, that there's a lot of apartment complexes that are just about ready to be filled up. So we're going to, I think, meet capacity with the building that's been going on multifamily housing. So that's going to be an interesting one to watch as well. So yeah, Jackie says he got so far behind. Yeah, the Fed came in too late on this. That's why the bond market started reacting the way that it did. They were kind of mad at the Fed, and there's an old saying, don't fight the Fed. But the bond market was just saying, you're not being aggressive enough. This inflation is eating us up. We need you to jump in here and get a little more hawkish instead of dovish. And everybody wants to be your friend. Even Janet Yellen, who's our Treasury Secretary, says, "Oh, we don't see a recession coming." I'm like, well, you must have all the drapes pulled in your place and your computer's broken. There's definitely a recession coming that I can see. We have so many have to sell, lots of listings. Yeah, Terry, where's the ceiling, though? I mean, if we get to 27,000, which is considered a balanced market or normal in this market, is it going to stop there? And then I look at the high of 55,000 listings that we achieved. That was 15 years ago. And now we have a greater population. So maybe we'll blow past that high of 55,000 to 65, 70,000. But that's going to get ugly if we get to that number. I just can't see the math working that way. Yet, no recession, it'll be a depression. I like to be a little more optimistic than that. I might be sticking my head in the sand, but I just don't see. How do you think the current projections will affect secondary market in northern Arizona, pine, strawberry, happy jack, payson? We're seeing some pullback there, mostly because of the cost of financing a second home. You know, they put this fee on. I think it was a 2% fee for your second home. And so it's making the down payment considerably more. And we've got a real water problem in pine and strawberry and starting in payson. So they're starting to feel the effects of that. Pine and strawberry, yeah, out of water. Where do you see rentals going in the West Valley? You know, we're seeing rental prices peaking right now and starting to dip a little bit until all of these unfinished places get finished. I think you're going to see rent staying where it is. And I was on a live stream yesterday with a gentleman in North Carolina, and he said their rent up there is going absolutely bonkers. He's got clients, their rent went up $600 in 1 month. There was tremendous government and Fed intervention in 2020. That's why the market did not drop in 2020. In fact, they overdid it. They're unwinding. But I look at the Federal Reserve data, and they're not unwinding very quick, I'll tell you that. Esther and Jimmy, I'm seeing foreclosures starting to pop up in Prescott. Be careful when you see the foreclosure numbers, because remember, we haven't had any for 2 years. So there's always been a normal rate, normal number of foreclosures in our market. And I think it was running about 600 foreclosures a month, something like that. And now we're down in a 200 and 300. So when you see them all of a sudden increase, remember that there's always been about 2% of foreclosures in our market. Do new build homes go into homes on the market numbers? No, these don't, but they do. I'll explain. Not every builder puts their homes on the MLS, although that's up 13% the past 2 weeks. What's that tell you? The builders are starting to advertise more. So those numbers are starting to show up in the MLS as active. So they haven't been playing there, and now they're starting to come in. So we'll see what happens, because there's a lot of people that are probably getting out of their contracts because they're priced out now. So I think that's something about I'm talking a little bit about tonight. And I think the new build situation is we're seeing permits way down, as I just showed you on that chart, mostly because we're probably going to have enough homes by the end of 2023. So why start building anymore now if you know there's going to be a slowdown? If you recently bought in the last 6 months, is that a bad thing? If your rate's fixed and you're down in that 2.8, 3.1, who cares? I mean, honestly, if you're sitting in a house and you paid $700,000 for it and you got a 2.78 rate, and now that house is worth $500,000, but you don't plan on moving, who cares? Just enjoy your low payment versus selling it, cashing out your equity, and going and renting and having your rent keep going up and up. Could you please share a few home inspection company names for the final new build inspection and how much they actually charge for the final inspection? Yeah, I'll put that below in the comment section when we're done here and see if I can get you some. There's a couple that I use, so I can get that for you. And there's one gentleman that's really good that lives up in the Peoria area. Any tips for new agents in this market? I think when you're new, it's probably healthy to go ahead and join a team and get some help, especially help with marketing and expenses, because if you're just a single agent, you're trying to get started, it's kind of tough. I would join a team so that you have more resources. People pool their resources. They bring in leads from other places like Zillow, although that's changing every time we look at it. So, but again, being with a team, try not to go it alone because it's really expensive. The other thing is do a lot of open houses where you meet people so that you can talk to people and so that you can talk about the market. And then thirdly and lastly here, know your data. Get in every morning. How many listings have we got? How many are under contract? How many are pending? Is it going up, going down? And just know the numbers. And if you're farming in a particular neighborhood, then know what's going on in that neighborhood. People say, well, I want you to be the neighborhood expert. Well, anybody can get on a computer and be a neighborhood expert in 30 minutes. So as a real estate agent, it should be right here. I remember when I first got started and somebody said, Rick, how many listings are out there today? I had no idea. That's when I realized I got to start digging and getting in the data. So Jackie or watch Rick. Yeah, that could be good or bad. So lots of stuff going on. Try to keep you up to speed on these ever-changing numbers. In the meantime, have a fabulous Thursday. I'll see you again later. Take care.